This company was once valued at $47 billion. A number so high that it placed it among the most promising startups in the world. Investors were pouring money into it. The media was calling it revolutionary. And its founder was being compared to visionary leaders of Silicon Valley. But just a few years later, everything started to fall apart. This is the story of WeWork. A company that didn't just sell office space, but tried to sell a completely new way of living and working. And how that vision almost destroyed it. At first glance, the idea behind WeWork sounded simple. The company would rent large office buildings, redesign them into modern shared workspaces, and then rent smaller areas to freelancers, startups, and small businesses. Flexible contracts, stylish environments, and a sense of community. But what made WeWork different wasn't just the business model. It was how it made people feel. Imagine walking into a bright, modern office in the middle of New York City. Glass walls, open spaces, people working on laptops, soft background music, free coffee, and strangers casually talking about ideas that could become the next big startup. It didn't feel like a traditional office. It felt like the future. And that feeling became WeWork's biggest selling point. The company was founded in 2010 by Adam Neumann, an entrepreneur with a big personality and even bigger ambitions. He didn't describe WeWork as a real estate company. Instead, he talked about community, energy, and even spirituality. He believed WeWork could change the way people lived, not just where they worked. And surprisingly, people believed him. In the early years, the timing was perfect. Startups were growing fast, remote work was becoming more common, and young professionals were looking for flexible alternatives to boring corporate offices. WeWork offered exactly that. As demand increased, the company started expanding aggressively. New locations opened not just across the United States, but in major cities around the world. London, Berlin, Shanghai, Tokyo. It seemed like WeWork was everywhere. From the outside, it looked unstoppable. But behind this rapid growth, there was something most people didn't fully understand. WeWork's business model was extremely risky. The company was signing long-term leases for expensive buildings, sometimes for 10 or 15 years. And then renting those spaces short-term to customers who could leave at any time. This created a dangerous imbalance. If things went well, profits could grow fast. But if demand slowed down, the company would still be stuck paying huge costs. And yet, investors kept pouring money in. One of the biggest turning points came when SoftBank entered the picture. SoftBank believed in massive bets. They weren't looking for small, steady companies. They wanted global giants. And they saw WeWork as one of them. With billions of dollars in funding, WeWork accelerated even more. The company wasn't just opening offices anymore. It started launching new ideas. Co-living spaces called WeLive. A private school called WeGrow. Plans for entire communities designed around the WeWork lifestyle. It was no longer just a business. It was becoming a vision of a new society. And the valuation kept rising. $10 billion. $20 billion. $30 billion. Until it reached an almost unbelievable number, $47 billion. At that point, WeWork was worth more than many established corporations. And yet, it wasn't even profitable. Still, the hype continued. But behind the scenes, cracks were starting to appear. Reports began to surface about Adam Neumann's behavior. Stories of extravagant spending, chaotic leadership decisions, and a corporate culture that blurred the line between work and personal life. Some described the environment as inspiring. Others described it as unstable. There were also serious concerns about conflicts of interest. At one point, Neumann personally bought buildings and then leased them back to WeWork. In other words, he was both the landlord and the CEO of the company paying the rent. This raised major questions about governance and transparency. But for a while, none of this seemed to matter. Because the company was still growing. However, everything changed in 2019. WeWork decided it was time to go public. An IPO, or initial public offering, is the moment when a private company offers its shares to the public. It's a huge milestone. But it also comes with one big requirement: transparency. For the first time, WeWork had to open its books and show the world exactly how the business worked. And what people saw was shocking. The company was losing billions of dollars. Its business model looked fragile. And many of the decisions made by leadership raised serious red flags. Investors started asking difficult questions. Was this really a tech company? Or just a real estate business dressed up as one? Was the growth sustainable? Or just fueled by endless investment? And most importantly, was the company actually worth anything close to $47 billion? Confidence began to disappear quickly. The IPO, which was supposed to be a triumphant moment, turned into a disaster. Investors pulled back. The valuation started collapsing. And within weeks, the company that once seemed unstoppable was in crisis. Adam Neumann stepped down as CEO. The valuation dropped dramatically, falling from $47 billion to a fraction of that number. What had once been one of the most exciting companies in the world became one of the most controversial business failures of its time. It was a stunning Sukutun. A reminder of how quickly things can change when expectations collide with reality. But the story of WeWork is not just about failure. It's about something deeper. It's about what happens when storytelling becomes more powerful than fundamentals. When vision overtakes logic. When investors chase growth without asking enough questions. WeWork didn't fail because people didn't like the product. In fact, many customers genuinely loved the spaces. The problem was not the idea itself, but how far it was pushed beyond its limits. The company tried to be everything at once. A tech company. A lifestyle brand. A movement. A revolution. But in the end, it was still a business that needed to make money. And that's where everything fell apart. Today, WeWork still exists in a very different form. Smaller, more controlled, and far less ambitious than before. The dream of transforming the way the world works didn't completely disappear. But it was forced to become more realistic. And maybe that's the real lesson here. Not every fast-growing company is a revolution. Not every charismatic founder is a visionary. And not every billion-dollar idea is built to last. Because sometimes, the biggest success stories are also the biggest warnings.